What's up, everybody? Welcome back to another video. In this one, we're going to be building a Martingale system, but usually with the Martingale systems that I've built before on this channel, here, let me pull it up. Usually what we've done before, right, is if we buy here and then price keeps coming down, then we buy again, double the contracts, keeps coming down, then we buy again, double the contracts until price gets a bounce, and then we close here, or right, if it comes here, it close here. That's the martingale we've done before. So doubling up inside of each trade. The one we're gonna build now, is gonna be letting a trade play out, and then the next trade we double up the contracts. So hopefully what this will do is, sometimes with the previous version, is right, if price moves very fast in one direction, right, you're going to be in a huge drawdown, and that might blow your account. So hopefully what this new one will do is, as price comes, if you lose your first trade, and then right, you can lose a second trade and then win your third and win it all back, and you're still not, you don't have that risk of, if the price shoots up or down one day, of blowing your account. So yeah, that's basically what it is. So first thing we're going to do, so I'm going to open up the auto algo assembler just to find some entry signals, because it'll work better if we want a 1-to-1. That'll be the simplest. Maybe in another version we'll change up the risk to reward, but 1-to-1, and we want a high percentage win rate. So let's see if we can find that. So do 18 by 6. ATR factor, no, we don't want, because that will edit the size of our stop loss. Then TP, yeah, let's make this for MNQ. So it's like a normal, like, couple candle sizes. Right. All right. Well, so that's like 400 ticks in an hour. So one candle can be like 100 ticks, right? Yeah. All right, so let's do like 250 to start out. And then we'll do it on the MNQ with a, so let's optimize data series. Let's do like 1 through 5, incrementing by 2. Then let's do the last year.
Order filled.
And then let this run. Shoot. Oh my gosh, it's gonna take a fat second to fix. Alright, do 500. Alright, so looks like we found some decent ones. Or at least we got trades often. Trades about once a day. And we got 55% profitable. So let's just check this on from June 1st till now, just to make sure it's still more or less that percentage. Percent profitable, still 50%. Yeah, I mean, let's see. Max consecutive losers 7, 6 or 7. Same thing for the winners. All right, well, the entry isn't the most important part, but because this won't be a long-term strategy that you would want to use, it'd be more just for like if you want to um like pass a prop firm challenge. If they let you do Martingale, then this would be exactly what you would want to use. All right, so but these are our signals. So let's open up Ninjatrader editor. Gonna go to strategies, new strategy. Do trade, no, Martingale trades, and then generate. Then we will compile and open in Visual Studio. All right, so now we just need to code this in. So strategies, let's open it up. All right, so this software basically just generates signals for us. You can use the software by itself to trade, or with the software comes this sheet, and you can see what is going on, so you can put it into your own strategies. So that's what we're doing right now. So we got 14 and 200. So 14 and 200. Then 18 period 250 TPSL. All right. So those are going to be our buys. Now we're going to run this same thing again, exactly the same, just looking for shorts now. No, not this one though. The optimization, looking for shorts. All right, so we'll let that run, and we are going to start coding. So if current bars less than bars required to trade, then we return. Now I'll do all right, for the cells, we only got one good one and only had 56 trades. I want us to have more trades. So genetic, let's increase this a little bit, and then minimum over a year, minimum 100 trades. And let that run. All right. So our signal is if SMA period is 50 is greater than SMA 200 and psychological line, the period is 18 greater than 70, then we are ready to enter our position. So we'll do enter set profit target calculation mode dot ticks dot 250 set stop loss calculation mode dot ticks 250. Enter long. And we okay, well for now that's all we need. Alright, now let's check out our cells. So we got 2 this time, 100 trades, 50% profitable. I mean 60 almost. Let's see. So our consecutive losers was 4 and 5 consecutive winners. Let's see here. Percent profitable came down a lot. Max consecutive losers was 8. That ain't good. So, quick calculation. Right? So say your 1-to-1 is you're trying to win $100, right? If you lose your first trade, you're down 100. Well, you would need one. No, that's not it. Shoot, I forgot how to do the calculation right now, but we'll do that later. Okay, but see if this one did better. All right, so this one stayed at 57%. Yeah, okay, so I like this one a lot more. So we're going to use this one. So let's code this in. If. So we have 141 and 128. So 128. 24 oscillator period is 12. And now 141 period is 12. Whatever that is. Let's see. Missing a parentheses. Alright, what the heck is this for? Oh. Random parentheses there. Random parentheses there. Alright. Then it's going to be the same thing. Set profit target, calculation, row.ticks, 250. Set stop loss, calculation, row.ticks, 250. Enter short. Alright, let's compile this and see how it does on the back tester. Make sure it's working. So back test. Martingale trades. Oh shoot. Darn it. I forgot to forgot to keep track of what the period was. So for the sells is 5. What was it for the buys? We took this one, right? Yeah, 14,200. It's on the 14-minute. Damn, I did not want that. Alright, so we want the minutes to be matching up, but let's just run it and see how bad it is. If it's horrible, then we'll just change it. Okay, so it's actually not horrible on the 5-minute. Alright, so look at that. Already looks like a decent strategy. It might be overfitted, but it's a scalping ones, and scalping strategies usually don't work for super long periods of time. But here we have about 1.5 trades per day. Max consecutive losers 7. So we need to be able to last 7 losses. So just keep that in mind if you do trade this. But now let's start the actual Martingale part of the strategy, which will hopefully make this strategy much more profitable. And if you did want to use it to pass a prop firm challenge, make it just a lot quicker. So first thing we do is we need to get the last trade result. So I actually don't remember how to get it, but I know I have it somewhere. Okay. I believe this is it. All right, so come up to here. We're going to create a global variable, bool last trade result. And then here, no, it's an int actually. Then so what this method does is, right, first is checking, right, once we've already taken a trade, and it gets the last trade, gets the most recent trade, and if the profit percent, percent of the account. So if it's greater than 0, then we were in a buy. If it's less than 0, or if it's greater than 0, then we won. If it's less than 0, then we lost. So what we'll do is I think we'll just so we need to call this, right, to check what our last trade was. Wait, no. Okay, yeah. So we'll call it right before we enter. We're going to call this. And this will tell us what our last trade was. So then what we're going to do is do double contracts equals gosh, I can't think today. Okay. Let's come down here and create a property. Which is going to be starting contracts. Then int contracts. All right. Then in the defaults, we'll set it as 1. All right. So now, basically, before we enter any positions, we need to check our last trade result and then modify the contracts we want to enter with. So right now, this will just enter with whatever you set it. So it could be 1, 10, whatever. We need it to be modifiable. So what we're going to do is create a yeah, so we're going to if last trade logic, if we return a 1, then that means the last trade was a win. So if we return a 1, then our entry contracts, which can be the current contracts you want to enter with, can be the contracts that we set it as, our base contracts. Else, if last trade logic returns -1, then we want to current contracts equals current contracts times 2. So, right, let's think about this. And then here we're going to do current contracts, right? So, first time we get a position or signal, current contracts equals to 1. Our last trade logic is going to be 0 because we don't have any trades yet. So, neither of these will execute. So, we enter with 1 current contract. But, right, so say we win that and we get another signal. Now, last trade logic is going to be 1. So, we take current contracts, keep it to contracts, which was 1 again. Say we lose that trade. Now, we get another signal. Last trade logic equals -1. Current contracts is 1, so we double it, and now we're entering with 2. Say we lose again. Current contracts gets reset to 1, so we don't want that. Do else. Current contracts equals 1. Now let's get rid of this and put it up here as so we can save it across. We also want to save it for the cells. So then we're just going to copy this and paste. Control C or Control S to save and compile. And this should work. So let's come down to Martingale trades. Base contracts is 1. MNQ. Slippage and commission. And let's see. Okay. So it's definitely doing that. Let's check out trades. Okay, so it looks like loss, loss, loss. And then it's just multiplying the heck out of our. So we want it to be 1, 2, 4. Dang, it does make some crazy trades though. Like, look at that. 129 million. But then we are reset back to 1. Short. Alright, so let's see. Why is that happening? Alright, so don't totally get why it was doing that, but basically just add this and it should work. My guess is, like, right, we're in a buy. Oh, actually, I do know what was happening, right? So say we're in a buy, but our signal is true again. So we run all through this, but our last trade was still a loss. So we're multiplying this. So say we get three candles in a row where we would have taken a buy. The first one, we actually buy. The second and the third, it thinks we're still in a loss because it hasn't closed the current trade yet. So it's multiplying it. But then when we come to enter long, it's not entering long because by default, we can only have 1 entry per direction. So that's, okay, yeah, that makes sense. That's what was happening. So just add this. This makes sure that we are in a flat position before we enter a new one. And by doing that, this is the results. So, it should, in theory, be the same equity curve, just much steeper. But let's see. Okay, that is wrong again. Should not go 1 to 16. 1, 2, 4, 6. 1, 2, 4, 6, 8. 1. These are wrong. Okay, so we still have something. Oh. That would make sense. So, I had just the regular contracts, not the modified contracts. Alright, and look at that. We just added 23,000 to our profit while keeping the same drawdown. Average trade, $58. Max consecutive winners, max consecutive losers. So when you add these two strategies together, right, like it basically you get more winners and less losers. So you can see both have long trades had 7 consecutive losers, but by adding the sells, right, we didn't get as many net for the total account. So yeah, I mean, it's a good, definitely made the strategy a lot more profitable. It is risky though. Let's see. In the trades, we should be able to see the max adverse excursion, which is basically the most drawdown you are in. So that should be, yeah, right before we, so at one point we were in 64 contracts. I think that's the largest. Yeah, so we were in 64 contracts, 1, 2, 3, 4, 5, 6, 6 times to win 8K. So, right, you lose that trade. The next trade, you know, you're risking a lot. But so maybe don't do it on MQ. Maybe do it on yeah, well, we can save that for another video. But yeah, that's it for this video. Basically shows how you can use Martingale to basically increase your returns over a quick amount of period, but it is more risky. But for a prop firm account, right? You don't care if you're in crazy drawdown. All you care about is if you blow the account or not. So 32. Yeah, so positions with 32, you lose 4K. You lose 2K. Yeah, so this strategy wouldn't work on a prop firm, probably. You'd probably need to do probably a little bit higher time frame and a little bit slower moving pair. So YM maybe. You can see if it works on YM. Probably not though. Oh, it did. Slightly profitable, but still doesn't work good. But yeah, that's it for this video. You know, hopefully that shows how you can use Martingale to, for prop firms, it really can help a lot. And actually, now that I think about it, I'm pretty sure most prop firms don't have rules on the contract sizing for Martingale. They just care about if you're in a position and then you're doubling up inside the position in drawdown. So you might be able to get away with this on a prop firm. Yeah, I mean, let's try something. Let's add a TP and stop loss. Int TP. And then now let's see if we make it like 50 or something on MYM. So it's, you know, really small values in trades. All right, yeah, that doesn't work. But all right, yeah, that's it for this video. Leave comments on this one. Actually leave some, and for the next, I'll probably do a part 2 on this where we actually try and get one just for prop firm passing. So I'm thinking of probably on MYM or MES, just because those move, like, tick sizes are less and they move less amount of ticks. And then also do a little bit more testing on the signal to, you know, get good signals that aren't overfitted. And yeah, we'll try and get a strategy that doesn't, you know, that can actually pass and that would pass quickly. But yeah, that's it for this video. Thanks for watching. Take care. Peace.